Welcome back to another episode of the Bull in the Cup podcast. I'm your host, David.
And I'm the co-host, also David, David's dad. All right, welcome everybody. So we're off schedule by a day because we just got back from vacation, and so we're recording this on a Monday evening. Usually do these on a Sunday, and so we've got an interesting lesson today. We want to talk about the S&P 500. A lot of times we hear from our listeners that they don't, have the time to research into what particular stocks they want to invest in, and so they say, what can I do to just invest my money in the stock market? And so I say S&P 500 is the stock, is what we usually recommend if you don't have the time to dig into specific stocks you like. And so, David, talk to our listeners. What is the S&P 500?
The S&P 500 is basically what it sounds like. It's a group of 500 different stocks, combined into one, and made up of a lot of big companies like Google and many others. And it's basically 500 stocks, which it's just tiny portions of every single one of those stocks. So it's more safe of a stock, but it's also good with going up slowly, because overall the market usually goes up throughout a long period of time. So if you want a long time investment, 10, 20 years, it would be good to use the S&P 500 or NASDAQ or any of these types of stocks that have are basically multiple stocks in one.
Right, like an index fund, right? And S&P 500 is a popular one because what's been the rate of return on average for S&P 500? If you invest, in they call it SPY, right? If you're going to invest in the essentially in the index fund and the stocks that are in the S&P 500.
The S&P 500 throughout the last bit of time, it's been going up on average around 12% per year. Or so it's if it doesn't seem like an insane amount, but it works out because it keeps on going upward, and it's more of a safe thing to put your money into.
Yeah, that's an incredible return. I mean, I think, yeah, you're right. Over the last few years, it's been about 12%. Historically, if you go back decades, about 10%. And so that's really impressive way to invest your money. I mean, I think you did the calculation. If you invested $2,500 30 years ago in the S&P 500, what would that turn into today? Just a one-time investment. I think you had it.
For what's it called? I'll show you guys also how to do this in your in your calculator. But if you have a calculator just like the ones you can do on your phone, you type in 2,500 times whatever number it is, which is 1.12, which is 1.12 is basically a 12% increase every year, and then to the power of 30, or however many years you want, that would go up to $75,000. Obviously, this is just going off statistics before. Nothing is guaranteed, but it's more of a safe thing to put your money into.
Well, and that was some impressive math there. Look at the equation he just ran. So David just gave you the equation to calculate over a 30-year period at a 12% return per year what your money will get you. And that's on a one-time investment. Obviously, if you're smart like David here, investing your birthday money or report card money into the S&P 500, into SPY, for your stock ticker, you're going to do pretty well in life. So that's the tip of the week, is to check out the S&P 500 as a long-term investment, not something that you're going to be putting money in and taking money out, but a long-term investment. All right, so let's talk about the two stocks we've been monitoring this week, or each week for this season. I've been monitoring Amazon. You've been monitoring GameStop. Amazon over the last week had a good week, went up from 208 to 219. It got all the way up to 224. It was obviously in the news this week because its founder and former CEO, Jeff Bezos, got married, and so that was all over social media, but not really relevant to the actual market price itself. But the market, the stock was going up really all week and took a dip at the end. It continued to rise, I think, as worries about tariffs kind of calmed down, and so it was still rebounding from what was a low point during the tariff issues in April. So an overall good week for it, but then it tailed off right at the end. On Friday, as news came out that Bezos, its founder, was planning to sell $1 billion in Amazon stock, 25 million shares by next year. And so anytime the largest shareholder in a company makes a big sell-off, it at least gives some pause, as people always want to go, no, well, wait a minute. An insider in the company, somebody who, certainly the founder is an insider in the company, is doing a massive sell-off. Is there any concern there? Is that an indication of something we don't know as the public? So it may cause a little bit of a scare and caused a bit of a dip in the stock on Friday. I'm not too worried because to me, this happens where certain high-level corporate officers sell big portions of stock because they want to liquidate their money. They need access to money. They sell their stock. He did this before when he wanted to fund his space company, Blue Origin. So I thought that explained, the dip is just some concerns. But I think overall, Amazon's in a great place. And we just had good news that Canada has rescinded its 3% digital services tax on American tech companies, including Amazon. So we were headed towards a bit of a trade war with a tariff war with Canada. That seems to have simmered down as Canada took the first step to back off of its reciprocal tariff. So Canada's saying, okay, we're going to drop our 3% threat tariff against your digital service companies in America, and hopefully that is the stepping stone towards a deal with the United States. So good news all around surrounding Amazon. What's going on with GameStop this week?
GameStop hasn't had much of a difference this week compared to last week. Around more of the same. I think it went up like 1%, not really a big increase. It was just it wasn't like much of a reason why, other than what we've already talked about like the Nintendo Switch 2 and everything. But otherwise, there wasn't much with the GameStop.
So a bit of a hold this week. I did see in the news that GameStop's investing heavily in Bitcoin, so we'll have to see how that progresses over the upcoming weeks. But bit of a hold in GameStop. Then you go first then with our weekly stocks that we're monitoring, or that we have our weekly stock game. I had Marriott over the last week. You had Tesla. Tesla had quite a week, so talk to me about what happened with Tesla stock this week.
Tesla was really interesting because Tesla's like robo-taxi or whatever was like the main thing that happened this week. It made the stock skyrocket. I think it went up $50 at the highest point of like time in this week, and then after like some calming down, there's not really any main reason why, and mostly because I guess people saw, okay, it's high, we should sell, but it went back down, so it wasn't that much up this week.
It's a really good point you have. It's almost a predictable drop in a stock when you see a spike like that. That's so unusual. You had it $50 at one point in the day. It had $30 where it had ultimately rose after day one. And you could almost bet certainly it was going to come down the next day, right? Because what do you want to do when the stock goes up so much? If you had that stock, do you want to capitalize on that loss? If it went up $50 in a day, how do you capitalize on it?
Yeah,
you got to sell it.
It does make sense for like stockholders who are just like trying to sell quickly. If it goes up that amount to sell, which means it's like it was a big thing still. So I feel like even though it went back down after people like selling the stock, I feel like people might buy it again because of they're still the big thing. Robo-taxi or whatever it's called was still like a big thing in the market.
Right, exactly. This idea that people who own Teslas could have their cars be autonomous vehicles and could actually make money from having their own Tesla vehicles be used as like an Uber or an autonomous vehicle. And so that's going to be interesting as that develops. But so far, it's just the technology has had a nice step in the process for Tesla. Okay, so we'll keep watching Tesla because it's a volatile stock, and we'll see what happens this week in the news with Tesla. Marriott, I had a nice week. I had a nice one there. You usually kicking my butt, but we had a nice one here. We started the week at 260, ended at 273, and so really the news for Marriott was continued expansion. It had expansion into the international markets that continued. It had a major deal announced with El Salvador as it looks to grow its presence in South America, and as South America continues to increase tourism and partnerships with Marriott. So big news for Marriott as it continues to grow, because what happens in a company like Marriott, they're opening more hotels. When they open more hotels, what does that do for profits? Just increases profits if each hotel is going to be profitable. So positive news for Marriott as it continues to grow its international presence, and that showed itself in the stock market price. So this week, I think, what are we going to do this week? It's a short week because the market's closed for 4th of July on Friday. We're a little late with this episode on Monday night, so it's only a few days. So I think we continue with just Marriott and Tesla in the interest of time and not pick new stocks this week. We'll save the new stocks for next week, and we'll just keep monitoring Marriott and Tesla.
Yeah, that seems like a good idea. We'll see y'all in the next video. Bye.